Yesterday, US markets were closed on the bank holiday, Martin Luther King Day. A lot of events occurred on the long weekend that updated the fundamental picture. And today is not the best day to trade risky assets. Trump's victory, growing global demand for safe haven assets, remarks by ECB policymakers, and corporate reports are pointing a confused picture at the beginning of the week. Let me remind you that the benchmark stock indexes closed mixed on a Friday, but all of them finished last trading week with gains. Wall Street indexes traded in the red in the New York pre-market on Tuesday. Futures on the stock indexes lost 0.2 and 0.3%. The S&P 500 is expected to trade in the intraday CAD between 4,745 and 4,780 points. The seller's lowest target seen at 4,727 and the buyers aim to grab the targets at 4,803 points. The main reason behind weekly gains on Wall Street is a 70% chance of the first rate cut by the Federal Reserve at least 25 basis points in a March. Investors were not spooked by the stronger than expected inflation data and the robust labor market. The core CPI was in line with the expectations and encouraged the risk-on mood. The fundamental picture is different today, so Wall Street is opening a new week in limbo. Investors are again flocking to safe haven assets due to escalating geopolitical tensions. A representative of the Iran-backed Houthi movement stated on a Monday that it would extend its targets would be aimed at US ships. Besides, the military organization will go ahead with its strikes after the US and UK attacks against the objects in Yemen. On the political front, Donald Trump won a resounding victory in the first presidential election in 2024 in Iowa on a Monday and asserted control of the party as he seeks an electional rematch with the President Joe Biden. On the other hand, US congressional leaders managed to agree on a stopgap spending bill to keep the federal government funded until March and prevent a partial government shutdown. As you understand, all of the above stimulates demand for safer assets. So Treasury yields are rising again today and are approaching 4%. Growing yields are putting pressure on the high-tech stocks, but corporate news is also causing concern. Apple and Tesla each lost 2% but later trimmed their losses to 1.7 and 1.5% respectively. Apple shares fell after the company announced discounts on its iPhones in China due to the pressure. Earlier, Microsoft overtook Apple Incorporated in capitalization last week. Tesla shares in turn went down after Elon Musk said he would not be comfortable turning the automaker into a leader in artificial intelligence and robotics without having at least 25% voting control of the company. PayPal dropped by 2.1% as Elon Musk's social media platform X, formerly known as Twitter, received a money transfer license from the state of Utah on a Monday, as the company explores adding a payment feature to the social media platform. The market does not yet know the results of the two gains of the banking sector, and the reports of each are closely monitored by the market. Later on Tuesday, Goldman Sachs and Morgan Stanley will report their quarterly earnings. Of the 29 S&P 500 companies that reported results on a Friday, 93.1% beat analyst expectations. Markets are alert to Fed Governor Christopher Waller's speech, who will speak after the opening bell. And the policymaker may revive Wall Street's optimism as his dovish statements, among other factors, contributed to the rally in the late 2023. While the stock market is digesting political and corporate news, the currency market has determined sentiment today, and the US dollar has asserted its strength across the board again. By the time of preparing material for this video, its index updated its 1 month high and gained 0.8% to trade at 103.20 points. The instrument is likely to trade in the intraday corridor between 102.80 and 103.35. Going beyond these borders, the index could either drop to 102.50 or climb to 103.70. The US dollar index grew by 0.8% to about 1 month high, while yields of a benchmark 10-year Treasuries topped 4%. And today, the euro and the pound sterling came under selling pressure in light of a weaker than expected data on a consumer inflation and wages in the UK, as well as the European statistics on the weakness of the Germany economy and the lower inflation expectations released today, despite hawkish statements from the ECB policymakers. In addition, the dollar is receiving traditional support from a growing demand for safe haven assets. So what about the Canadian dollar? It's losing ground against its American rival. The USD pair is trading at 1.3460 at the time of opening the New York session, 0.3% up, and the USD pair is expected to trade in the intraday corridor between 1.3430 and 1.3351. Like most major currencies, the loonie is buoyed by the stronger greenback. The inflation report from Canada helped the loonie trim its losses against the US dollar. Canada's annual inflation rate accelerated to 3.4% in December, from 3.1% in the previous months, matching the consensus. The reading was in line with the Bank of Canada's signal that headline inflation would remain stubbornly high and close to 3.5% until the middle of next year. The acceleration of in consumer prices was linked to a recovery in gasoline prices. Consumer prices slipped by 0.3% from a month ago, as expected, and the data bolstered policymakers' warnings that another rate hike may still be needed to combat high in prices. Meanwhile, the crypto market has been trapped sideways amid the lack of a high impact news, and the market is still overwhelmed by euphoria after the approval of a Bitcoin spot ETFs by as a result, Bitcoin is trading flat, and the token opened the New York session at about 43,800, 0.4% up, and the baseline intraday outlook suggests trading within the corridor between 42,100 and $43,200. Going beyond these borders may push the price either down to 41,600 and to 41,100 or up to 43,700 and $42,200. Our review of American markets is over. Subscribe to InstaForex TV channel and we will keep you updated on the daily market developments. Good luck in your trading and see you online tomorrow.